Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I've been the penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to this Tuesday edition of Benzinga's PreMarket Prep, brought to you by Thinkorswim and Shaken Analytics. I'm Spencer Israel here with Joel Elconin and Dennis Dick. We're back from our nice long weekend. I'm sure Joel and Dennis have some good stories from the weekend, but we also have some market stuff to discuss this morning. Earnings coming through now. It looks like we're starting to get into the heart of our earnings season. We have Morgan Stanley already in, a few other stocks reporting as well. Some M&A news as well overnight that may or may not have impacted Dennis's trading. We'll talk to him about that. And we've got some notable ratings changes as well. Our guest will be at 8:35. He is Nick Shaheen, options expert and author of Create Income with Option Spreads on MarketFi. Joel, how was your nice long Martin Luther King Jr. weekend?
Very, very nice. Birthday celebration weekend for Lisa. Started Friday, didn't end until Monday. But back in the saddle here. Nice mood in the S&Ps. Had a lower open and continued down to 57.50. That was below Friday's low, but now bouncing back, keeping 22.65. I don't know when you guys and gals are going to get tired of hearing about that number, but I'm going to call that the number of the week again. Crude trading higher by 76 cents here, back over $53. Been in a basic trading range here in crude, 51 to 55. Moving on to gold. Gold is back over $1,200, up $16 at $12.16. Now, we read a Barron's over the weekend at the yuan. While the Chinese is considering tying the yuan to gold, and it could be a good boost for gold. I wish I would have heard that like 2 weeks ago. I would have been there buying some gold. But Dennis, how did you do trading yesterday since it's not a day off in Canada?
No trading for me. I did not trade. I like the U.S. markets, and I don't know that much about the Canadian markets, so I did not trade. We got to take a day off every once in a while, don't you?
Yeah. So what did you do on your day off?
I actually went shopping. Went over to the Big D, went to Great Lakes Crossing, did some shopping with the boy. Boy tore up Burlington Coat Factory, as he always does, so the toy section destroyed, but it was a fun day. I had a good day off. Actually, I saw a movie over the weekend, too.
Which one?
La La Land.
Well, I just want to know, but I won't take away your man card immediately for going to that, but...
okay, and I'm going to try to redeem myself here, too, because, okay, so got a babysitter, and I didn't look at any of the movies or anything, so we go to the movie theater, me and my wife, and we're not sure what we're going to see. Looking there at the movies, and Laura's like, oh, that La La Land. She's like, that's supposed to be really good. She's like, it's going to, it's going to win the Oscars and stuff. And I'm like, okay, well, it's going to be pretty good. I'm like, okay, that's cool. So I won't spoil any of the movie, but watching the first scene, and it opens up, and they're in this traffic jam in L.A., and then all of a sudden, somebody gets out of the car, and they start singing. And then the next person starts singing. And then the next person starts singing. And I'm like, I look over at Laura, I was like, is this a musical? She starts laughing. I'm like, no. Anyways, musical, La La Land. Okay, so it was okay, but I am not a fan of musicals.
I mean, you couldn't tell from the title, La La Land, but...
I don't know. I didn't even think about it. I was like, oh, I think it's a movie about L.A.
I did.
It was like some type of like I knew it wasn't like Star Wars. Like I would prefer to see Star Wars again. But when they all got out of those, I knew I was in trouble. When they all got out of the cars and started singing, I'm like, I'm in so much trouble.
All right. Well, I saw a good movie, and
what'd you see?
Hidden Figures.
How's that?
Yeah, it was excellent. It's about
which one's that? What's that one about?
That's about the initial U.S. space missions and basically the mathematics behind it.
Oh yeah,
it was really good.
I would have saw that one.
Yeah, Kevin Costner was in it. Sheldon was in it. Some just really great acting, and it was a good movie. The audience was clapping, and it's a feel-good movie. I definitely give it, a B+ on my scale, but I recommend people seeing that.
Fuzzy says, "How about those Cowboys?" Trying to change his topics from the movies.
All right.
That the Green Bay game we should just mention. Wow, the Green
Yeah,
Bay.
highest
Like that
rated,
was
football game, football broadcast since last year's Super Bowl.
that
Most
catch.
watched, most watched divisional playoff game ever. Fox has had a streak of good luck this year. They had the most watched baseball game in 25 years. This past game, this past weekend, most watched divisional game ever, most watched game aside from the Super Bowl. And there was one more thing they had that was the most watched something. So Fox has had a string of good luck with ratings this year.
Okay, I guess the gremlins are back here. Ace is telling me there's an echo. Spencer, you know how to fix this, though. You said you know how to fix this. Spencer is going to go fix this right now. Incredible football game there over the weekend. So you missed all the good stories on La La Land because it's echoing here. Spencer's fixing it right now. Let us know if it's fixed. We're going to jump into the markets here, 8:06, and we have movement, obviously. S&P futures are moving down. But let's jump into the earnings here right away because we have two major earnings reports that did report this morning here. Morgan Stanley coming out with earnings. That stock is trading up 1% here in the pre-market. MS Spencer, what were the numbers?
MS Q4 EPS 81 cents versus 65 cents. Revenue of 9 billion versus 8.5 billion. So a beat on the top and a beat on the bottom.
One number. I'm going to give it to you here right now. And I haven't even looked at what the pre-market chart or anything did. Wish I would have been up and probably trading it. But Morgan Stanley, $45 is huge. His size in the book. And we always talk, people want to look at technicals. They want to look at a lot of things. I look at order flow. And that's what gives me an edge because nobody's looking at order flow. I've got, there is people that are looking at order flow, but the majority don't because they don't want to pay for the NYSE Open book. I can see the big size, $45. So that's a blocker. Think about football. That's your big blocker there, $45. $44.90, Joel's telling me, is the pre-market high, which doesn't surprise me because of the 45 blocker.
Yeah, exactly. 44.90. That's your pre-market high. 80 cents off that level. Now we're backing off. So, and Dennis, I don't want to bring it up because I know you're going to get a big kick out of it, but you did get me on that JP Morgan bet, and I feel like I get a mulligan on this one. I think we need to reset it for right now. That 88.10 print should have, or whatever the high was there. Unbelievable. I was expecting some volatility. That thing went up to 8. What was the high on Friday? The new all-time high, 88.17. Backed off to close at 86.70. I was looking through some of the options on this just to see what kind of volatility was. And at one point, okay, the 87 puts you could have bought for a nickel. Okay, when that thing traded 88, and at one point they ended up trading at 90 cents. Obviously, they backed off to close 35 cents, but great volatility in that thing. I don't know. We close. I think the high's in for J.P. Morgan for a while, Dennis. Key reversal, ugly bar there. Do you want to reset the bet here? And
No, I'm gonna walk while I'm ahead there. So got the lunch. I'm gonna come over and collect it. I think right away this week too. Just one point you were making there though, and you talked about those weekly options and expiring on the day. And I'll tell you, there's a strategy. I'm not a fan of buying options at all, except on the day they're expiring, because sometimes you can get them dirt cheap. And if you suddenly see some volatility just looking like it's going to show up into the picture, if you're on the Friday and the option's expiring on the Friday, you can still get 3-4 hours of trade off that option. So, like you were saying, they were trading for a nickel, and they ended up closing what? Were those the 88? What were the 87 puts? Or the 88?
Yeah, it was the 87s went down to a nickel, and then at one point, when it made down the low, they got up to 90 cents, and then obviously the close was at 70, so they only went to 30 cents. That still would have been 6 times your money, but I mean, you got to be real. I mean, at that point, when that thing's breaking out over 88, I mean, how many people are thinking, oh yeah, this is going to come back down under 87?
Yeah.
The only reason I see that is because, the only reason I see that is because just watching Morgan trade on earnings days all these years, I've known not to trade it, and there's been a lot of crazy volatility. But for that thing to go straight up to 88.17, make a new all-time high, then come crashing down like that. I'm looking at the $86 level long term. We're down 50 55 cents on it. But what's going to be the driver now to take Morgan Stanley back up to 88.17?
Or
Earnings.
JP Morgan to go
Yeah.
to 88.13. Even Morgan Stanley was going to be the driver to get it back up to 44.90 here this morning. It doesn't look like there's much of a driver here either. Stocks are looking, somewhat weak here. It's still profit taking. Where are we on the Dow Watch? 'Cause I don't, like I said, I don't even have it on my screen. Where are we?
Obviously we're going to be, 60, 70 points lower this morning with the S&Ps down 8. But went off the board on Friday in 1988. 9,885. So we now we're well over 100 points from that critical level with inauguration looming on Friday and a lot of big earnings reports.
Know about the Echo. Spencer is working on the Echo. He says he's going to get this fixed here, so he's working on it. We had an Echo problem. This is a different Echo problem, so they're working on it. We know it. I'll try not to echo so much. Maybe if I talk like with an Echo, maybe you won't hear an echo. I don't know.
That would be a double echo.
That would be a double echo. I can't do my math. UNH, United Health, also reported earnings. Have we seen the UNH report go by here yet?
Yeah, that went by
way early.
2 hours ago. UNH Q4 EPS $2.11 versus $2.07, so beat by 4 cents. Revenue 47.5 versus 47.3 billion, so a slight beat there as well. As they also reaffirmed their fiscal year 2017 revenue, so looking good.
Stock just hanging out here in the pre-market. We're up 20 cents here. The stock has been hanging out for a month, Joel. This has been just the quietest chart here. You figure, well, maybe earnings will kickstart and get this going one direction or another, because we've been stuck in a little 4-point range here for a month, and that's a lot for a $160 stock. I don't know what it's going to take to get UNH going. Like, earnings doesn't look like it's going to move it out of this range either.
Look at all those highs there. Boy, oh boy, you got to respect the 163 even level. Did get a spike into 164 handle, but I am just looking at, let's see here, about 6, 7, 8 highs in that right near 163. So I'm just keeping an eye on that 163. Big seller there, and it looks like they're remaining there here as we're back down at 161.80. On the downside, a lot of lows in the same area too. Not getting worried about any real major action in the downside till we take out 160.50.
Fuzzy talking about Tiffany's had a good run the last few days here. Not so much this morning. Getting hit here. Weaker holiday sales. Spencer, do you have those numbers there from Tiffany's? I think the comps were down 4%.
I have 2-month holiday same-store sales down 2%. They're also recording a $25 million impairment charge, but I only see 2%.
Okay. Any regard here, stock trade down 4 points.
What's an impairment charge for a retailer? Are they a lot of people drinking while they're there?
Good question. I'll figure that out for you.
Okay. You got that. I'm laughing at my own joke. That's bad. 76 even. That's your pre-market low. Boy, bunch of lows in that area too. Pair of lows at 76.08, 76.11. This was back at the beginning of the year. Also, that 76 area posed as support here back in November. Yeah, 76. Gets back down there. It'd be hard not to cover short after it went off the board at 81.92 yesterday.
Yeah, agree. I think he's going to find buyers here too around that 86 or 76 level. We got a couple mergers here to talk about. One, remember I talked last week here and I said GameStop, when I had good news going my way, just random good news, I'm like, that's not because of trading. So when you come in here, and I'll just tell the story again here, when you come in, the next morning and you happen, have random news work in your favor, that's nothing to do with your skill set. That's all to do with good luck or bad luck. So good luck if you're on the right side of the trade. Bad luck if you're on the wrong side of the trade. I had GameStop just randomly on, overnight trade, from a technical perspective, or I can't even remember what the reason was, and they came out randomly talking about their holiday sales, and they were bad. Stock opens down 10%. Well, I randomly just happened to be short Reynolds American over the weekend. I can't even remember why. It was a small position, but it was a hedging position there. And don't you know it, bad luck happens to me on this one. So all that money I made on GameStop, I said, throw that into a piggy bank. Don't spend that money because it'll come back, because you'll have one position that will work against you just on random news working against your trade. And that's the case. Reynolds American looks like the rest of it's getting taken over at 59.64. So I've covered already. I was short coming in. I've covered here in the pre-market. It's trading up 4.3% here on the news that they are getting taken off the board. Spencer, give us the details.
I don't have him in front of me right now. Hold on a second. I'm trying to work on this echo. So,
It's bad.
hold on.
So 59.64 it looks like cash getting taken out.
I just want to make one comment, regarding Dennis and the trading lesson on that. Been around people that have had these kind of been around traders, and he covers it immediately. Now, yeah, maybe he could work the thing and maybe get out at 58 or get out at 57.60 or whatever the circumstances. But the time spent, worrying about that, trying to get it, the opportunity cost in these kind of situations, boom, you just hit it. You're out. You're moving on to
What
the
if it
next
goes
trade.
higher? I mean, it's off the board at 59.
Exactly.
The price is 59.64. So
Exactly.
really, is it going to come back to 57? I don't think so. So 50, it's $1.20, $1.30 below it now. I mean, okay, you can start analyzing. Maybe they're going to, not allow the deal, but they already own. Bat already owns a whole pile of Reynolds. So just buying the rest of it. So I can't see why it doesn't get allowed to buy the rest of it. And that's why, it's $1.20 here, or less than the takeout price. So that's why I cover.
And you take the hit and you readjust and you move on instead of
Yeah.
I short more and try and bring it in and get my average
It's coming
up.
in right now.
It's
you came in a nickel.
That's right. Just you move on. S&P futures down 850 here, 2264. Had a little bump up, not quite to the close. The close is way up at 7250, and we had the lower open. So gonna have to really fight back today to get unchanged at 7250.
59.64 is the price there. Interestingly, we had some unconfirmed trader chatter last week discussing rumors that this deal had hit a snag, and they weren't sure it was going through. And then look what happened Sunday night or Monday night / Tuesday morning.
Yeah, rumors sometimes work out, rumors sometimes don't. I don't follow the rumors too much. I mean, obviously, if they move the price, you have to respect it. But, for the most part, rumors are rumors. I mean, it's important to know if a stock's in play or not. Obviously, I had the big gap up. If you look back, you say, why isn't there much of a premium? I mean, well, look, I had the big move back in October already on this thing when it gapped up from $48 up to $55 or $56. So, this wasn't completely unexpected here. That's why there's only a couple more points here for the takeout premium. There's also another takeover here this morning too, Spencer. CWEI, which is Clayton Williams getting bought by Noble.
Yep, that one, the takeout price is $139 per share is what it comes out to. $139 per share. It's a $2.7 billion deal, and the deal was expected to close in Q2. Cash and stock.
So. So it's cash and stock. So for you risk arb traders out there, the ratio is 2.7874 Noble plus $34.75 in cash. So basically what that means is CWEI will trade 2.7874 times Noble after you knock the $34.75 off. So that's, your ratio here. Noble is trading down here in the pre-market just a little bit there, but going forward here, that's what you're going to see is the 2.7874 as risk arbs come in.
And Noble, I'm just going to do the technicals on Noble. That will be your leader. Consolidation over the last 4 days. Actually, a nice trading range, tradingrange.com here, between 37 and 38. You now have broken down through the lower end of that channel. So let's see what kind of resistance 37 poses. See if we get back into the 37 handle. If you can, fact rally at 37.60 area. You have 4 highs in a row. Coming on the downside, the overshoot, the initial hit, they took it down to 35.96. You got a low in that area. Boom, back at on November 30th at 35.98. So 36, maybe 36 to 37 is a new trading range here in Noble Energy.
Linda in the chat's asking what's going on with Netflix. I can tell you Netflix is actually got an upgrade from Mizuho here this morning. That is why it's trading up here. Again this morning, new all-time highs for NFLX stock trading at 135.04. Mizuho upgrading, I believe it was to a buy. Spencer, can you verify if that's where Mizuho?
Buy, and they raised their price target to $152. And it was at $112, so they just bumped it up a pretty good deal.
I mean, FANG, we've been talking about it's back. Facebook's down here this morning with the overall market, but Amazon, we know, is not that far off all-time highs. Netflix is at all-time highs. Google's kind of within striking distance, looking like it wants to go there, too. FANG is back.
Netflix trading up a new all-time high, 135.45. We've backed off a bit. Folks, keep your hat on if you're trading on Netflix. Earnings are on January 18th. That will be tomorrow. After the close, not so much earnings people are focused on, but new subscribers. That's will be the focus. But new all-time high here in Netflix. I guess Mark Cuban was right, didn't he? Hasn't he been real bullish this issue every time he gets whacked off earnings? But hard to find a resistance point, but I will give you one, and that's the pre-market high of 135.45.
There's some other big ratings changes here this morning too. Disney getting upgraded by Goldman Sachs. Almost 110 this morning. Here it's
Really?
trading at 109.37. Yeah, they're upgrading it to a buy. That's the big number here at Disney. I talked about it last week. 109.49. But really, if you go out to the book and you look at the size, 110 has some big size there. I think that's probably going to be the struggle. If you can get over 110, then it starts to open up here again. But I don't like the stock in the 109s just simply because there's so much overhead resistance at 110. Takes out that 110 number, then all bets are off. On the short side.
You want to know what the note said, the Goldman note?
Sure.
It said that the 2018 film slate may be the best ever. 2 Star Wars films, 4 Marvel films, and 3 animated films. That might make it the best year for movies ever, at least with regards to Disney. They expect the ESPN headwinds to abate due to the normalization of NBA costs. Of course, ESPN on the hook for massive rights fees in the next decade. They also see new attractions, and all that adds up to a very rosy picture.
He said the acro actually helped my Goldman Sachs. That's funny. I'm going to say it again, 110. What's your number here, Joel? You got something for me?
Disney? 109.49.
Just take the high.
Yeah, just take the high, recent high of the move. They got downgraded, fought its way back here, traded down. I don't know, 109 and a half, 110. I mean, here's another thing that you have to look at. We give you these numbers, and we could say 109 and a half or 110 or whatever. But if someone has like a real decent, a huge position in this, a million shares, I mean, they're not going to be selling it here in one day. I mean, it's going to take a while. Earnings are not until early February in this one, but to me, I mean, this just looks like a whole sell region. Unless you get a great earnings report and the market breaks out to new all-time highs. But
when do they report?
I got February 7th after the market, so you still have.
They're usually a little bit later. Yeah,
they're a little bit later. But the one thing about Disney and ESPN and these networks, I mean, I think when some of these sports contracts come up, I just don't think you're going to see the same kind of huge increase that you did. I mean, you get some good viewer ratings, but just that makes me a little nervous about some of these media stocks.
Twitter getting downgraded to neutral UBS here this morning. Twitter is trading down about 1% in the pre-market. I've given my Twitter analysis a lot of times on this show. I just think it's still overvalued here. So unlike what a lot of people say on CNBC, I think it's just scary with the market cap still over 12 billion. But anyways, give me a quick technical level Twitter.
I mean, $17 has been holding on, and I'm just getting tired of defending Twitter here. I mean, it's still keeping a small long position, but they're going to need a real good print to get this going. Down 2-day low 16.96, pre-market low right there at 16.96 as well. So keeping an eye on the $17 level. Going to need a good print to get this thing out of the doldrums.
CMG downgraded at JP Morgan here today. It's trading 1% down in the pre-market. Man, I tell you, this thing has just been trading with resistance at that 420 every single time. It goes to 420. It seems to fail. Got back there in November, almost on the button of 419.30. I mean, we were 70 cents off on a $400 stock. I'll call it and round it to 420. Before then, in October, we were struggling up there. And then just 4 days ago, 420.23. The next day, 418.32. So all kinds of overhead supply around 420. It's where it keeps running into trouble. Now it's starting to fall back in here. It's getting into a gap area. 407.80 is the low. So you're trading in the gap this morning. 405.01 is where the last trade just happened in the pre-market.
Well, this thing rallied last week or at the end of the prior week. It rallied because the news wasn't as bad as everyone thought. Not a great thesis for a stock to rally. Still hands off on this one. Now I think you could be patient, and if you really wanted to cover this thing, I think you get back into just under 400 to fill that gap. Hands off on the long side here for CMG.
One more ratings change of note, American Express AXP, which has been on a pretty good run here since October as well. October's down at $60, now $77 from the pre-market. It is getting upgraded to overweight at JP Morgan. It is trading up another 70 cents here in the pre-market as well. 77.32. Joe, I'll give you technical levels. I'm going to go look at the book and see if I see anything kicking around in the AXP book.
I mean, just too many highs in the same area for me just to get all excited over this upgrade. You had the all-time high. Is that the all-time high at 70?
No.
No?
No, we got to go back.
Oh, I
90s.
forgot about the Costco thing, right?
Yeah.
That took it down.
It hasn't even got back to where it was before they had the Costco. They lost the little Costco monopoly.
Yeah, I mean, if you're super bullish here and you're waiting for it to take out that 4-day high at 78 even, I mean, really, if you look at a longer-term chart, maybe 80 here, but hate to use like a 70s or 80s term, but I think you're begging here if you think this thing's getting back up to $80 today.
What is that term? Begging?
Yeah. You ever heard that, Spencer? No? Maybe it's a 60s term. 70s.
Okay, well, give us what is begging supposed to like?
Like if someone's like bothering, or about something, you go, "You're begging me."
Oh, okay.
Begging,
Well,
like begging. Come on, someone can support here.
Term,
You've heard that.
It's something
before.
I wouldn't use. Ace says begging bits. Is that what you're talking about?
Okay.
American Express. Oh, okay. The number here, I went to the book here, $78 is 96,000 shares there. I mean, it's funny, how people look at charts and look at technicals, they analyze the hell out of it, and so many times numbers and highs are meant just for order flow reasons. I always say the order flow is what creates the chart, so why not go and look at the order flow first, and then look at the technicals, because a lot of times the technicals are just a picture of order flow, and 78 was the high back on January 10th. Why did we stop there? Because there wasn't enough gas to get through the 100,000 sitting at the point. So there you are. 78 has 96,000 shares already. This one is probably going to grow. So you basically say there's 100,000 shares sitting at 78. That's major resistance until they get enough money to take out the $78 100,000 share offer.
Yeah, and did we just get some bad news on JW Nordstrom here? Because just alerted in our chat here from RMH that you did have some consolidation. You did have some lows in the move, but I don't know if do we get any comps or anything?
Well, we got a downgrade this morning.
Okay.
That's a downgrade.
Stiefel downgrading to a hold lowers the price target to $40, but that was a couple hours
A long
ago.
time ago? Okay. Well,
Yeah, but it hadn't traded much this morning. It just kind of started trading here a little while ago. So yeah, I think that's your catalyst here. It was trading down the entire morning, 43.83, but now they just started hitting a little bit harder. Stiefel's influential. I mean, we talk about who's influential, who's not. I always say Goldman's usually your most influential. I'll tell you, Stiefel's probably top 5, man. They move stocks.
give us your top 5.
downgrade.
Give us your top 5.
I don't have an actual list, but if I was going from like my feel, I would say Goldman is number 1, and then you got the big guns like the J.P. Morgans and the Morgans and the Citigroups. But I put Stiefel almost just under that tier. Just
Really?
yeah, like just like maybe not as much gas as the Goldmans and the Cities and the Morgans, but I'd give Stiefel just as much gas as a UBS. Stiefel, they make good calls, and you know what? And a lot of people follow their calls. And when they downgrade something, people take note. And when Stiefel downgrades, and the other thing is Stiefel covers a lot of like smaller mid-cap stocks. And when you get a downgrade on a mid-cap stock, it's going to move a lot more than a downgrade, say, on American Express, because there's just so much less stock in the book. It's a lot less liquid. So typically that's what matters too. Like you can say, oh well, Stiefel, a stock will move down 3-4% on average when it downgrades it. Well, it depends on what they downgrade it to. Second thing, it depends on the target. Third thing, it depends on is how thick is the stock. Because when they're thin, they move a lot more.
And different analysts, have different specialties too, in tech sector and whatnot.
For sure.
Yeah. Pre-market low is where we're trading, 43.17. Kind of an ugly area. 44 will now act as resistance. I think maybe if you want to hold out on this one, maybe wait for 42.22. That was your low on August 5th. So look a bounce maybe at the lower 42 handle, at least on the first time. But this is kind of following the trend of the retailers. Who got it all kicked off? Oh, it was Macy's, Dennis. And
Macy's and Kohl's same day.
Oh,
Disappointing.
Dennis.
You know what I was looking at here? I was just driving on my way home. home from Oakland, and I passed on 75. I passed Oakland Mall. I was in a little bit of a traffic jam myself. I did not get out and start singing in the traffic jam, but I'm looking at the sign at Oakland Mall, and the big stores on the sign right at the top is Sears. The other store that was there was it was Sears, J.C. Penney, and Macy's on that sign. And I'm like, man, Sears, that store's in a lot of trouble. Man, J.C. Penney, that store's in a lot of trouble. I'm like, is Macy's going the way of Sears? That's what I was contemplating as I was like stuck in the traffic jam looking at that sign. I'm like, is Macy's going the way of Sears and J.C. Penney? That's the question I posed to you today, Joel.
I don't know. They seem to be a little bit more proactive in, like, I mean, even though this has happened to them. What I thought you were going to say is you want to get out and short Oakland Mall. Because
well, yeah, when you see Penny and you see Sears as two of the major, hubs there in that mall, and then Macy's is the other one. I'm like, phew, yeah, maybe shorting Oakland Mall isn't a bad idea.
No, I mean, we've talked about these retailers, for quite some time. First of all, we never were big fans of them beforehand, just because of the competition, and now the Amazon. I mean, maybe that's just going to be a big Amazon. Store center, distribution center. All the malls are going to turn into Amazon distribution centers.
Just everything Amazon.
Yeah,
everything's Amazon.
Amazon Mall, and then they take everything. The drones will fly in, they'll pick up the stuff, and then they'll distribute it from the malls.
I just am somewhat scared. I'm not buying any Macy's because I know what's happened to JCPenney. I don't know. I'll tell you, Macy's is in better shape than JCPenney and Sears. But let's fast forward 3 or 4 or 5 years. Maybe they're not going to be in that great a shape. So you see Macy's, and it's somewhat attractive here, 5% dividend. You think, oh, Macy's is fine, they're okay. But similar business models to Sears and JCPenney. Obviously, Sears and JCPenney just really, let the stores pretty much die. But and Macy's is trying to get the online presence, trying to do other things. But it's a consumer trend, and the consumer trend is to buy more things online, and it's just as easy. If you're going online, why not just go to Amazon? So I'm somewhat scared. I'm not buying any Macy's. I think Kohl's a little bit different animal. You go in those Kohl's stores, they're always busy. They're all little standalone stores. They're always got their deals already. There's I feel like it's a different type of shopper at Kohl's than it is at Macy's. But if I was buying any of these department stores, I think it'd be Kohl's, but I don't want to own any of them right now. I'm concerned here, just, for the same reason everybody's concerned, is how much is Amazon eating their lunch?
All right. Amazon here is getting a little pop. The street is liking that they're going to add 34,000 jobs in 2017 among other major employers. I guess this is probably because of Donald Trump, right? That Walmart did this. This is the Trump effect here. Bad day on Friday. I'd like to see if it gets up to 68. So far, the pre-market high, 67.80. Multiple lows at 68. You
got me confused, Joel. You said Amazon. Now you're talking $68. What stock you talking?
Walmart.
Walmart.
Didn't I make a transition about Walmart in the chat?
Talking Amazon, and then we're in the Walmart. It was a bad day for Walmart on Friday. So
yeah.
I don't know what to say about Walmart either. I think you're a discount shopper. I don't classify them, as much, obviously they're not in as much pain as some of these other, major department stores, because Walmart's, your discount retailer. I think the Walmart shopper is still going to be there. I start to get interested in the low 60s. I don't know, 67 got down like 56 last year. What do you think? You want to do a bet?
No. I mean, you're the artful dodger in this stock, man. You kept on moving your bids down. You wanted to get this thing. I don't know. I'm just not a huge fan of these retailers, and Walmart included, even though their parking lots are jammed. It had a big run here. The only thing I would look at here, the big run, what was that, from 56 to 72, right? Was that a 16-point move? Let me do the air math on this so I can figure out a 50% retracement. Yeah, you had the low of the move at 56.30. Oh, you got over $75, 19-point move, so that's 8.5. I don't know. Get this thing 64, 60, 64.5, 65. I might get a little interest, at the 50% retracement. Besides that, I'm hands off to that area.
30 seconds here. RMH wants to open the video. We'll save that one for Nick here. I just want to quickly give you the imbalance look here in the next 30 seconds. Bank of America, 423,000 to sell. Citigroup, 83,000 to sell. JP Morgan, 77,000 to sell. So there is more pressure in the banks here this morning. Morgan Stanley's giving back a lot of its gains as well. Is now only trading up 29 cents. Gold's catching a bit. A lot of gold miners here have large buy balances this morning. Barrick, 112,000 to buy. Gold Corp, 53,000 to buy. KGC, which is a small $3 one, is 388,000 to buy. Just looking here, gold is up substantially this morning here. It's trading up $1.32 if you're looking at the GLD. SLD is trading higher here as well. It's up about 1.5%. So gold and silver coming into favor here as market gets a little bit more defensive.
All right, it's Tuesday morning at 8:35, and that means that we're going to bring in Nick Shaheen. He's the author of Create Income with Option Spreads. We're going to take a quick break. Be right back with Nick.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elkanah, along with Dennis Dick and Spencer Israel. And we have our normal Tuesday guest on. That's Nick Shaheen. He's the author of Create Income with Option Spreads. Nick, how was your long weekend?
Normal? Thank you very much for calling me normal. I've been called worse. Weekend was great. I could always use an extra day of sleep, but it was nice to relax and not have a lot to do.
Nick, don't get carried away. I said our normal Tuesday guest. I didn't call you normal, okay? So don't get excited there. Okay, first let's talk about the S&Ps and the overall market. And you mentioned a cash level in the SPOOs. I've been talking about 2265 basis the futures here for, like a week and a half, 2 weeks. This has been a key area heading in earnings season. Inauguration on Friday. I mean, how are you playing this, when you get this much consolidation at one level?
It's, it has been easier to be long than short. That's the obvious statement. But other than you guys mentioned the FANG and the excitement from the earnings into mega caps, I find it hard to chase the run up in the regular quote markets. So we rode up some stocks that I usually don't like to go long, like Tesla and Netflix, because I'm a fundamental trader and their fundamentals are still questionable at best. But saw the technical breakout and took a couple of trades there. That was pretty good. So yes, I could go long the Nasdaq, for example, via the Qs and throw a quick blanket over all of them. It's hard to see all of them disappointing. So if you go long the Qs, you kind of diffuse the risk a little bit. But I'm not chasing the market itself. And the fact that they got to within pennies of Dow 20,000, couldn't cross that line, it means they're really trying. And that's the second time. Last time they fell within, 12, 13, 14 points, whatever it was. So the bulls are trying, and they can't break through the wall that they created. There's no bears out there. So the wall is just bulls booking profits or something, like a psychological break. But on the 21st, I drew a line in that area you just mentioned, in the minis, and we haven't gone through it. We keep coming back to it. We go through it, we come back to it.
And inauguration, things like that coming up. Political events can sometimes change the complexion of the markets. Moving on here, I see you brought up a chart of Amazon versus Macy's, so we were going to go to NVIDIA first, but here, let's go to this chart and explain what our listeners are looking at, Nick.
Let me pull it up and speak to it. Amazon versus, it's almost like they're, especially for recently, they are like towards the right-hand side, obviously, they're inversely related. And people, it's like they didn't see Amazon coming for a decade, and now suddenly, oh, it's the hot thing that hopefully they're making the transition to online. Like, where were they the last decade? They being brick and mortar retailers, and I'll use Macy's as an example because you guys used it, and they own so many of them, different brands, that they're a good gauge. So suddenly it's like now they want to transition to online. And when they're doing it, I said that before the holidays, if you remember it, I think on your show too, that I worry over the retails because yes, they might be taking share as far as the top line, but I don't think they're ready to play in the sandbox that Amazon plays in, which is low margin. Amazon's been doing it since inception. These guys, this is new to them. And their P&Ls weren't ready, and you're seeing it in the stock prices.
Could you explain? You say yes, you can't do this for 10 years and still be called questionable. Proven winner long term. You're talking about the Amazon down here. Then
Amazon. I'm talking about Amazon. And if you ignore that comparable chart there, you see if all the way bottom left, those little green ticks, I connected them, and if you throw it up there, the arrow goes up to where Amazon busted through recently. And this is like a long-term chart, and they keep calling it, oh, they're bloating, they're spending every penny they're making, and they want to short it. Well, at what point do you say, I was wrong? That it's a legitimate company that's growing and investing its cash into actually growing. And it's not burning cash. It's not borrowing to burn cash. They're spending their own money. At any point in time, they can, dial down the spending and ride what they have. But so far, it's been a startup, and you don't evaluate it based on its profit. You evaluate it based on how quickly it grows its top line and what other venues it goes into. AWS, perfect example. Out of nowhere, they're the leader in the leading thing, the cloud. So it's a legit company, and people that keep saying the poo-poo is fundamentals, I think they're wrong. They've been wrong all along.
Let's move over to NVIDIA. RMH is asking about it in the chat. He's like, is this still the stock to buy on dips here? Here's NVIDIA. It's had some quiet consolidation here the last few days. I mean, if you can call it that. We obviously had the huge, ridiculous run up into December, and then profit taking a few days before the end of the year. Now we're looking at just consolidation station here for NVIDIA. Higher or lower now?
I tell you one thing about it. I know better when not to trade it, and let me pull it up and I'll speak to it as I'm looking at it.
Okay.
So I can't. I'm a fundamental trader, and I always find it hard to chase run-ups as steep as this one's had. But you can't, the too hot to chase, too high too hot to short, too high to chase. And I could have told you I can't chase it into its highs, but I did short it cautiously, and I posted a chart that shows a green box and a red box. The green box was a debit put spread, which is a short position when it was at its highs, and the red box was a credit put spread, which was a bullish position that's cautious. So I used the money I collected from selling the credit put spread to buy the debit put spread, so I shorted it for free. And then you can close the short for free because the premiums on the red box barely moved because it's a longer term. And there's exuberance, so supported a premium, but the premiums on the debit put spread got more expensive, therefore my profit. So I can tell you that there's room for more downside, but I can't tell you to short it here, but it's a decent entry price if you're in it for the long term. If all the hoopla against it is real, then it should stabilize and then meander on higher. But there's so much potential below if it's really a frothy story. I'm not saying it is. I don't know its fundamentals as well as probably your listeners. So it is a decent entry point. If I'm long-term, I probably nibble a little bit. I wouldn't go all in. But what's the risk of waiting out a few days?
I don't think I want to be in it if it cuts through that low, which was 99.38. That was low of the move. That's where we hit the stops below $100. We go back down there. I don't want any part of it. So if you're looking at it here, if I was buying at 102.56 this morning, I think that would be my out. I think it cuts through $99. I'm out.
If I'm looking to enter this one, I wouldn't chase it. I mean, I wouldn't be hurried to do so. I think it's just inches away from just a hideous high that it had recently. So where's the rush?
And Nick, how did you? I mean, I got caught in this one when it blew out through the 100. I mean, what? I mean, did you wait till the Andrew Left thing came out, the short recommendation? Did you have it, on that? I mean, there was a lot of different points. I mean, I kept on being a moron and putting moron and moron, and Andrew Left bailed me out of it. I still got believe it or not, I got a few of the January 90s that I don't think I have to worry about them being in the money, whatnot. But, how do you, I mean, measuring moves, I mean, what kept you out of trouble here? Because there was so many, look like potential entry points, 105, 110, 115. What was the final trigger?
On the 28th, I think, when I put it on, which is the big red candle, I believe. I don't know what was the trigger at that point in time. The trade I set was a debit put spread and a credit put spread. Therefore, there was no out of pocket, no big out of pocket expense. In fact, the credit put spread made money over. I don't know why, but it did. It's one of those things where conviction grows when there's not a lot at stake, right? So I spent a few bucks in a debit put spread, but I also took in a few bucks in something that's opposite to my credit put spread. So I was hedged. So I didn't need a lot of conviction to say, okay, it's at all-time highs. It's gone up like a rocket ship. The market's extended at all-time highs. It's as good a time as any to take it short.
All right, let's go ahead, Dennis. I'm sorry.
I was going to say, related to that, AMD, those two stocks have kind of been moving in sync. I know one's an only $11 stock, but I pair trade these things even against each other because they've been moving so much together. AMD is starting to break down. You got that ugly head and shoulders there a little bit. The neckline, I could say, was around $11. We're below that now. And that's why, I'm somewhat a little bit concerned here just on NVIDIA here. What are your technical thoughts on AMD, though?
AMD was another short at the same time, but it wasn't as successful because the hedge on that, even though it was optional, and if somebody took the hedge, I said, okay, that would be a hedge, which was the credit call spread on the Qs themselves, was a wash. So if somebody took the AMD short at the time I said, then they're okay. Technically, it's like it's somewhat vulnerable, but it just simply reverted to the mean. And let me see if I can throw one in there for you. AMD, there we go. So if you see the AMD, the red-blue zone is just a strict regression line. So it's when they say reverting to the mean, that's where it goes to. So based on that, it could see some downside there a little bit. And again, almost the same comment. Where's the rush to enter it long while it's falling? It is a falling knife here, even though from highs. So it's not like saying anything bad about the company. It's just any stock price that gains so much could breathe a little bit. So why not wait out a few candles to see where the price action goes and where, because the market in general is kind of like hesitant. So why not wait out a few candles?
All right, let's talk about Apple here. And you had talked about some important levels that it had taken out here, trying to get to 120 here. I think earnings are later in the month on the 31st. What's your technical outlook for Apple?
Apple is technically frisky, although it has a lot of resistance in the open interest. But it has set a couple of repeating patterns of like cup and handles or whatever you want to call them, just behavior that is bullish prices. So the white line, you see the very top white line with an arrow, is inviting to momentum buyers. So I wouldn't be surprised to see it take out the 125 area. However, the earnings, as we all know, is a binary event for the short term. So it may make or break. It will make or break this technical potential that's built into it. So from here, because of the earnings, I wouldn't lay a big fat fundamental trade. I would ride it with a lottery style trade where I invest some of the money that I'm okay losing, and it won't break the piggy bank, and it would leave me trading another day. But technically, it could have potential. It is unfortunate that it comes at an earnings because it is a binary event based on one set of one morning or one afternoon.
And you had a flying car update too, right?
The flying car, we always said that, you and I have been kid about that. They need the flying car headline. But today I read a headline about a flying car, but it was from Airbus. So it wasn't Apple.
What's the headline?
That they're planning on building one. So wouldn't that be called the plane? I don't know. I'm just saying. So the flying car, the proverbial way we use it is that they need something. They can't just say, I mean, they're wowing us with the number of iPhones they can sell. And did we discuss this last week? Last week we had a fly in my household. Out of 3 phones, one turned out to be an iPhone, and that's the Samsung debacle. So let's say, just using me as a market test, 1/3 of those who left at Samsung could probably land on an iPhone, regardless of whether they actually want an iPhone or not. Just because that's what's on the market. The salesperson said, here's a free iPhone 7. I was like, I'll take it. Not for me, but for my son. So, but then on the other hand, I heard him say just yesterday, literally, he goes, "Oh, iTunes sucks now." That was his words, not me. So he was listening to Pandora. So the little Pandora is making the perception to teenagers that iTunes sucks. So, some good things, some bad things. I really need to see something from them. And so far, Tim Cook has less than wowed me. He's not the right guy. We said that.
Nick, can I respond to the iTunes sucks comment? That I think that is the exact reason why last week Apple announced they're going to get into the content creation game, and they're going to create some original TV shows that will only be available to subscribers of Apple Music and people who use iTunes. By making it better and trying to differentiate themselves from the Pandoras and the Spotifys of the world. I think it's specifically that's the exact reason. So they are doing something. Whether or not it'll work is a whole different issue.
So when you mentioned that, I have to mention Netflix. And I just threw a Netflix chart in there. Technically as frisky as Apple, but it's already stepped into that breakout. And so you can see it from the yellow line once you take out a neckline after a couple of tries where, cup and handle-ish, inverse head and shoulder-ish, whatever you want to call it. It's a bullish price pattern. But I worry about Netflix because of headlines from Apple and Amazon and all the other guys that already have TV streams that switch. I've seen a lot that say, "Hey, come watch our shows online for free anywhere." So where's the incentive to keep Netflix other than their own stuff that they produce? So a little scary for Netflix, but so far the bulls don't care.
Yeah, and I can tell you that my parent, when I first got my parents Netflix, when I got them on it, they were not at all impressed with. They were like, "Well, I can't watch new movies, you mean?" And I was like, "Well, no. There's a massive library here of old movies and some new TV shows," and they were very disappointed with. I guess they thought you could watch like newer movies on Netflix, and they weren't thrilled. And it's a great question, Nick, and I don't have the answer for you, but it's a great question to ask.
Nick, I want to go back just a little general market talk here, and I just saw a tweet here from Ryan Dietrich, and he said over the past month, 21 trading days, the Dow has been in a range of 1.07% using closing prices. Going back to 1900, that's the smallest range ever for that time period. I mean, come on, what do you make of that, Nick?
Like I said, I don't know why we're not running higher. There are no bears out there. So, the bulls are in complete control, and it's almost like a bear trap? I don't know. I mean, I'm scared to short anything at this point, and sell credit call spreads have become very scary. But the way you can do it is by selling them, shorting out in time. So if you want to short a company or the indices, you can go out in time and short them way higher than now and out in time. And then in the meantime, you can buy a few debit call spreads a few weeks out and just benefit from the upside move that comes. So you're kind of like hedged right away from the get-go. You can also marry the one shorting out in time with a credit put spread, but at all-time highs, I'm not running to sell any puts or credit put spreads unless it's in something I believe in. So if you want to own a stock like you and I talked about last week, Joel, about selling Twitter puts, if you want to own Twitter eventually at a certain price, then you sell puts at that price. But you have to be ready to buy it if it falls through it.
We've been on the line with Nick Shaheen. He's the author of Create Income with Option Spreads, joining us every Tuesday. Thanks a lot, Nick. Great information. I'll have to figure out how to do those riskless trades someday soon. We'll talk to you again next week.
Thank you very much.
What are you seeing out there, Dennis?
You got me looking at Ryan Dietrich tweets, and he just tweeted this one too. The SPX hasn't closed down 1% in 65 days. That's the longest run since since the summer of 2014, when it actually had a run of 66 days. But 65 days, we have not had one 1% down day. Is that not incredible? Think about a couple years ago, or even to the beginning of 2016, when we were having 1% up, 1% down every single day. I mean, there's a big reason here. You know what? It's been quiet. I mean, once the market starts to get that quiet, traders get more aggressive with their quoting, market makers get more aggressive. It gets thicker out there, and then it gets harder and harder to move. And we've even seen some pretty big headlines coming out from individual stocks, and they haven't moved the S&P. We've been talking about that for a while. S&P's just kind of hang there. I mean, when they pull back 1%, they come and buy them that day.
Yeah, DC1 hopping in the chat. We did cover CMG here, and I was looking for that to come back, perhaps to fill the gap at 400. We identified the major resistance up at 420. Now, FN, I think that stock came up on Friday here, and I don't know if DC asked about it or Downward Dog, but I think it was Downward Dog. And this one, you had a double bottom to lean on, and that's your area of support after a prolonged sell-off. Good day on Friday, so trading up another $1.29 here. I don't see any major resistance until the double top at 39. Not sure what the news is moving at this morning.
Just looking here at just the overall market thoughts today. It looks like a risk-off day. I mean, it's early. The banks are getting hit hard here now. JP Morgan's trading down over $1 in the pre-market. Also, I think I had a downgrade. Citigroup and Bank of America both trading down here as well. Goldman's trading down. You're seeing some of the defensive stocks. Obviously, the back was a little bit stronger with the Reynolds American takeover. I'm seeing Mo trade up in the pre-market here as well. If you're looking at the TLT, which is an indicator for the defensive stocks, TLT is way up here this morning, up over 1% in the pre-market. XLU somewhat following suit. It's trading up almost 0.5% in the pre-market. So some of you yield plays, some of you utilities, some of your defensive stocks might possibly catch a bit on a day like this. So if I'm looking at it, as that risk-on day or risk-off day, I'm looking, at some of the obviously cyclicals. Maybe those can be a little bit weaker. Oil is a little bit stronger here this morning, so some of the oil stocks are bucking the trend, where we are seeing oil trade up. So oil is looking okay, and we know gold is been strong all morning.
And I just want to talk about here the JP Morgan. I know, Dennis, you got to give me a mulligan on that bet. Come on.
No.
Man.
That's like the Nike bet that you got me by 12 cents or something.
But I just want to talk here, and it's a heavily traded stock. Bank America. Now, we were talking about this on Friday. They had the earnings. The JP Morgan had the earnings. And the level that I was focusing on was the high of the move at 23.39, I believe, right? And you had multiple highs between 23 and a quarter. Look what it did on TU on Friday. Got to 23.41, 2 cents above that. The boat was loaded, and they flushed that. I'd love to see this thing get back up to 23. If these things can't move on good earnings, I think I'm calling the top in the financials here, Dennis. Can we?
You're calling the top.
I'm calling.
I want to argue with you. I mean, you've got a big level there in Bank of America here. So if you want to call the top, there's not that much risk here. I mean, if you're saying 23.50 is going to be my bogey, the stock makes a new high and takes up 23.5, which is probably some size there, I'm going to be out. You're risking 75 cents here this morning. So even if you're doing it right now in the pre-market, so you want to do a 2-to-1 risk-reward ratio, at least make yourself $1.50 on the trade. But I'm not arguing with you here. It wasn't good that those stocks gave it all back after the initial run up. So I'm still sitting on the fence though. Like I think we're still in a range here, especially stock like Bank of America. Like I can see some support at $22. JP Morgan, I want to see what it does at 85 here this morning. I think it's going to test it this morning. It's at 85.55. It's down $1, but it's a couple of lows right in that area, $85. Let's see what it does at the lows of the move. We can take out those lows of the move. Then maybe it starts to look interesting from a short play.
And just one final note on the options. When I was looking at those JP Morgan options on Friday or later in the day, both the puts, I can't remember what was trading, but both the puts and the calls were just getting absolutely slaughtered. And that was just because of all the premium
Yeah.
baked into these things ahead of their earnings. So sometimes, you could get a nice bang for your buck off an earnings report, but a lot of times on that earnings day or the day after, once they suck all the premium out of those things, would be a good time to look at an issue. All right, 8:59 here. Spencer, you want to wrap things up and preview Wednesday's show?
Tomorrow we got a guest that I know Joel will like. Chris Kimball is the founder and CEO of Kimball Charting Solutions. He believes in the power of the pattern, and if the name isn't hint enough, a technical analysis, so I know Joel is going to like talking to Chris. So Chris Kimball tomorrow at 8:35 is our guest. If you missed any part of today's show, catch the whole thing again. It's on iTunes, SoundCloud, and YouTube. The podcast is at least after the show, probably in about an hour or so. Please remember that all the information, material, and content from our show is for informational purposes only, not meant to be investing advice. And if you want a free 2-week trial of Benzinga Pro, it's Benzinga's real-time news platform. Just go to pro.benzinga.com or call us up at 313-723-2000. 9 o'clock now, we're going to let you go. Hope you have a good rest of your day. We'll be back with you folks first thing tomorrow morning.